Hello, my name is Brady Buckner, and I am the president of the Financial Services Innovation Coalition. FSIC, as we call it, is an economic empowerment platform where we do advocacy work for minority communities and underserved. We also do programs in these communities, and we also do research. So today we have with us from Zillow, we have Nicole Bachaud, and she is an economist and has written several articles that we're interested in discussing. Before we do that, I want to turn it over to our CEO, Kimble, and he's going to do a little introduction, and then we're going to ask some questions of Nicole. So Kevin, take it away.
Thanks, Brady, and thanks, Nicole. We're really excited. This is the fifth or sixth in a series. Nicole, you're like the third or fourth economist we've had on. We are really big on trying to make sure as we reach Financial Literacy Month in April, we're going to culminate with a symposium or seminar on housing discrimination and housing policies and some suggestions to try to improve the way this all works, and then to, especially for African Americans, reverse some of the decline we've seen that came up in your paper and some other research we've seen. So Brady, thanks for putting this together, and Nicole, again, thanks for joining us.
Yeah, Nicole, do you want to just give a little bit about yourself? I know you got tons of credentials. I didn't know which ones to list. So.
Yeah. So I'm an economist at Zillow. I've been here for the last 3 years. I do a lot of research around fair housing and fair lending, particularly really diving into the credit market, mortgages, and just really understanding how those things interact with different populations, right? Particularly along racial lines is where a lot of my research sits. And so I'm really excited to talk to you guys and hear what your thoughts are and what questions you guys have in terms of your work, and how that can kind of relate to some of the stuff that I'm doing.
Okay, and Kevin, I'm going to let you take the most of it here, but this is regarding your paper that you wrote. The gist that we took from it was that 84% of minority applicants were rejected when it came to applying for a mortgage loan. And so we'll have some questions on that. So Kevin, I know you had a couple specific questions, so why don't you go with those?
Can I just give a quick clarification?
Sure.
So what the paper was saying is that Black applicants are 84% more likely to be denied than white applicants is the correct understanding of that.
Okay, I misspoke, so thank you for correcting that. Excellent.
So Nicole, just to tie into that, there's a recent report that came out that said that Wells Fargo rejected 50% of its Black applicants. I don't know if you've seen that report, but how does that tie in with your research? So 84% more likely, does that equal 50%, or how do those numbers work?
It's we usually see over all mortgages, all types of mortgage, all loan purposes, home improvement versus home purchase, we see around 20%, 16 to 20% for Black applicants over the past several years. When we look specifically at certain types of mortgages, home improvement, we see over 50% of Black applicants are denied for that type of loan product. And so if we cut it different ways, we can kind of see some different numbers, but the general kind of over everything is around 16 to 20% usually.
And how does that differ between banks and online lenders? What does that number look like?
Yeah, so we did some research last year that actually dove into the size of the lending institution instead of, brick bank versus online. It was more, the number of loans that each institution was putting out. And what we found is that large institutions are more likely to deny all applicants, and particularly applicants of color. Small institutions are less likely to deny applicants of color. So when we go into those, community-focused banks, those credit unions, those things that are really centered in the community, we see a lot more equitable lending coming out of those institutions versus the larger banks of the world.
Okay. There's a study that came out a few years ago now, but said that Black homeownership was as low as it was in 1968, or lower than it was in 1968. Is that still true? I saw in your paper, I know you mentioned that the high point was like 49% for Black homeownership in 2004. Mm-hmm. But now it's back down to 44%. How does that mesh with?
Yeah, it's been falling actually even since this paper was put out a couple months ago. The last quarterly data came out that Black homeownership rates fell almost a full percentage point from the last quarter. And so unfortunately, this is not going in a good direction, right? We've seen a lot of just a lot of outfall from the Great Recession, right? You know, we saw a hugely high disproportionate number of Black households that were foreclosed on. And we've got to see a lot of those households then come back into homeownership. Either, you know, they're soured by the situation at all, like why would I put all this money into something, and you know, this is going to happen to me in the future. You know, we're seeing a lot of that, and also just the fact that there's so much less generational wealth to help younger folks get into homeownership in minority communities, and so that's, you know, some of the reasons we're seeing that. Throughout the pandemic, we've seen a lot of adverse effects on Black communities, you know, more likely to have lost a job, more likely to have been renters, and been in a really, you know, tight financial situation as a result of, you know, the rent changes we've seen, and less likely to have benefited from the equity gains in homeownership, since homeownership rate is so low for these communities. So that's definitely something that, you know, there are a lot of factors in the economy in the world that are hitting from different angles that are, you know, really trying to keep pushing against progress in Black homeownership.
You know, if we as we kind of, we've been looking at different policies to try to move forward. We're a policy organization at our core. We advocate, we do research, and we advocate for policies. Did anything, and actually, if you don't mind, let me do one more question as a preliminary. We've been, for the last 5 or 6 years, we've been working on the real estate appraisal problem. Now it's kind of been in the news, but we worked with the Black real estate appraisers, you know, 2010, 11, maybe 2016 about this, on this issue. And the 30% difference between when a white appraiser goes in and a Black appraiser, does that affect any of your research? Did that impact the way your research was done or what you saw in the numbers?
Yeah. So the really difficult thing about that is there's no really good data set that looks at home value versus appraisal value. We can look on, you know, these anecdotal stories of one-offs of saying, I had my home appraised for a second time and it's worth $500,000 more than before. So, you know, we know that these things are happening. It's really hard to get data on that to be able to show any correlation or causation from other factors. So yes, you know, we know this is happening in the market. It's not necessarily something that we can tap into and understand in terms of the data. When we look at Black home values compared to home values overall, that is certainly one of the reasons why it's very likely that there's a large gap there. You know, 16 percentage point difference between Black home values and home values overall is likely a lot to do with being underappraised, and that's definitely a big challenge. We also, on the other side, we see in a lot of Black neighborhoods, you know, there's some research that has been done in specific case studies that Black neighborhoods are more likely to have higher tax burdens than white neighborhoods. And so not only are the homes being appraised for less, they're being taxed for a higher value. So that's, you know, kind of making the home worth less money, but then charging these homeowners more money. And that's, you know, really kind of a double-edged.
Yeah. Have you, when you're talking about the appraisals, I guess it's come to our attention that currently during the pandemic, there was less reliance on in-person appraisers, especially for online lenders. I know Zillow, as your trend with Zillow, have you noticed any increase in appraisal values or any evening out of the disparities, or has it had any impact on the value? I guess I should ask, because that's the question.
Yeah. So we don't have any data particularly on appraisals across the board that would really allow us to see those differences. It's likely that is changing the game a little bit now that these things are done, you know, sight unseen, kind of off-site. But again, I don't have the data to really tell the story numbers there.
One more as an economist, one more sort of like overarching, like theoretical question. You know, given the long history of discrimination and home ownership from loans, from the way the FHA was designed, that, you know, good loans were considered loans that didn't give to Blacks or Jews. So that was the whole standard. How does that impact, you know, I saw another piece of research that Wells Fargo produced, said that, you know, Black people have made great strides in the last 100 years, right? Which didn't seem to really make a lot of sense, given that we've lost so much civil rights movement. But I don't know if you have a way of, you've even done any research, we have a way of quantifying or kind of, you know, I guess if you go back to 1921, that was when all the racial riots, like you've got Black Wall Street being burned down in Tulsa. And so, and there was the heat of Jim Crow. So then going forward, you know, things are necessarily relatively better, but not really if you start at depending on the point you start at. Can you talk to that at all? I mean, that's a long-winded question, but can you address that? Like, how did someone come up with this, how does someone make that statement? Like, what are they looking at? Or have you even No, I'm sorry. That's we can take that question off. It's too hard to answer, but you know what I mean.
I can maybe give you an answer adjacent to some of the questions you just threw out.
Sure.
But yeah, I think something that a lot of people, I'm sure you guys are aware of this, but a lot of people aren't really aware of this, is the fact that, when we put out the Fair Housing Act, and we said no more redlining, that's it. We just said it. There was nothing that changed physically on the ground, right? We never went into those communities that had been negatively impacted and said, okay, now we're going to give you banks. We're going to give you access to credit. It didn't happen. It was just like, we're going to pretend like we're not doing this anymore. But we look at, the adverse effects on, in historically redlined neighborhoods. Those neighborhoods have lower homeownership rates. They have worse credit outcomes. They have higher instances of financial institutions like predatory lenders and payday loans, and they have less banks and other ways to help build credit for those people that live there. And so, we never really undid what was done and the harm that was done. And so it's really hard to then say that we've made any progress because we've never been intentional about it. This isn't a problem that goes away just because you snapped your fingers and said, we're not going to do that anymore. You have to go in and then undo it, right? And redo it in a different way. So rebuilding credit, rebuilding the entire credit reporting and credit scoring system is important. Not just let's piece together some things and try and shove this into a way that, fits the 21st century. We need to really start from the bottom and figure out how do we build this up in a way that brings all of these people in, right? Allowing rental payments and utility payments to count towards credit. People already pay those. Let's bring those folks into this market and really give them value and help get them into the formal credit system instead of trying to work with what we've done the past 80 years just because that's what we've been doing. So I think that's definitely important to focus on, in terms of policy, we have to be intentional about it. And this isn't something that is just going to magically go away if we just try to be nice to everybody. Like that's the reality that we're sitting in.
So at some point you just got to kind of cut the crap, right? And you kind of
Yeah.
to so then what would you say, so beyond the taking rental payments and a few other things into the account, into the credit reporting system, like if you were, give me two ideas, like we were going to do a policy, if we had Nicole's vision for that, if I could go with a magic wand in Congress, what would be 2 or 3 things you would think we should do first?
Yeah, I mean, that's a tough question. What I think we should do is give reparations to all Black people in America. I don't think that Congress is going to approve that.
Well, we're waving a magic wand, so we're doing a magic wand.
That's a big magic wand. Yeah, that's a big one.
But yeah, realistically, focusing on ways to build credit and finances, when we look at the other side of affording to buy a house, there's a down payment, right? So helping to get minority folks building enough wealth to afford a down payment, either through down payment assistance, through income equality, raising incomes is going to be a great way to help bring some people into that financial position that they can then move forward and afford to buy a house. Those things are going to be really important. Kind of these pieces on the fringes that impact your ability to get into housing more so than housing itself right now. We need to remove those barriers before we then start addressing the fact that building more higher density housing. Our survey data shows that Black and other minority communities are much more likely to own townhomes or condos versus single family homes. So let's start making more higher density housing, more alternative housing types that are more affordable in other parts of the country that would create more opportunity at a lower price point, just to help people get into the door of homeownership and really start reaping those benefits. Those things are going to be really key in helping to reduce the gap in the homeownership rate and move Black homeownership up in general.
Okay.
Hey, can I ask you a question? This is switching gears just a little bit. We realized at FSIC, all the research we've done, it's great to look at national averages, but really things are very regional. What's happening in Cleveland is much different than what's happening in San Francisco. Is there anything that you took away from your analysis that said these regions are maybe headed in the right direction and these regions are really need a lot more work? Anything notable there?
Yeah, I would say I don't think there's any regions that are really, I look at that and I say, you're doing a good job. There is still a significant gap in places, even if the overall denial rate is lower, in the western part of the country, typically credit is stronger there in those communities than in the rest of the country. So we see less denials overall for mortgages, but there's still a discernible gap between Black and white mortgage applicants. And so, there are fewer Black applicants that are denied, but there's still way more than white applicants that are denied. So, when we look at that, that's definitely a consideration. Definitely the highest rates we see across the board are really throughout the kind of South Midwest kind of portion, and the East a little bit. The Southeast definitely is where we see kind of the largest gaps and the largest overall denial rates. So that's definitely something that regionally, you kind of see when you put it on a map.
Okay, interesting. Thank you. I would
Well,
say
while,
that, oh, go ahead, Q.
No, go ahead. I was going to close it out, so go ahead. No, I mean, we've taken.
Yeah, that's what I was going to do, is say, and this is basically your chance to say, did you have any revelations after this analysis? You've been very forthcoming with your answers, and we really appreciate that. But any last revelations that you took from this about something that was maybe positive that we could reinforce, or something that really needs to be done?
Yeah, so the last time that we looked at our home value by race index, what we saw, while there is a large gap between Black home values and home values overall, that gap is getting a little bit smaller. Black home values are appreciating a little bit faster than other home values. And so, hopefully that momentum can continue. And that would really help to close that gap more in the future. We look at some of our research on the racial wealth gap, and particularly on a household level. Housing makes up 40% of the racial wealth gap when we look at differences in home values and home ownership rates. And so, closing the gap in home values is a huge thing that is significantly going to change the racial wealth gap for the better. And as well as, getting more Black households into home ownership is going to be, the other way to really create more equity, create more opportunities really for that gap to close as well. And so those are, the two kind of big segments to focus on. And like I said, home values are changing for slightly the better. So that is the silver lining in all of this is there are, some good things to come. There are some good things happening. It's just going to take a really long time for us to really see the final outcome of those.
Awesome. Well, thank you, Nicole. This is great. We really appreciate you taking the time to share your thoughts with us, and we hope to talk to you again.
Yeah, I have 1,000 more questions, but we'll save it for another time. So with that, we're going to sign off. If you're interested in the Financial Services Innovation Coalition or discussions like these, please see our website at fsicoalition.org. And if you'd like to set up a call with Kevin or I, please feel free to do so. With that, I'll say thank you, Kevin. Thank you, Nicole, and have a good day.
Thanks.